Bitcoin has seen a massive rally toward $28,000. Are the bulls finally back in control, or are they celebrating too early? Let's go ahead and find out. Okay guys, welcome back to the channel. I hope you're all having a fantastic day today and an even better start to the week, because I sure do know Bitcoin is doing just that. A massive rally toward $28,000 has occurred in the last 24 hours upon the breakout of the horizontal resistance zone we've been discussing over the last 2 weeks. You can see we broke out above from this horizontal resistance, the 3 points of rejection, resulting in a strong move toward that 28.5 to 28.4k level. A massive move, not an insignificant move, and in fact this move has got some consequences we're going to be talking about in today's video. But the main question of today is this move a tangible and supported move, or is it just a bull trap? Could this move result in a higher time frame reversal and potential pushback over 30,000, or is it nothing more than a fake move upwards based on the speculation surrounding a debt ceiling announcement? These are the questions we're going to answer today. We'll get into it. Before we do get into it, smash the like button, hit the comment button, and subscribe to the channel, guys. We do daily videos on Bitcoin, focusing on the facts, the data, the technicals, the charts, the news events, the economy, and everything in between. No hype, no emotion, no BS, pure, raw TA. If that's the kind of content you're interested in, join our Telegram channel. The second link down below, you've got access to charts, updates, analysis, educational posts, news events, information, and so much more, guys. If you are interested in joining our VIP channel, you can see our VIP channel is over here with 582 members. You'll get access to everything from exact trading signals with specific entries, specific targets, specific stop losses. You'll get everything you also get in that free channel, but the main thing is you're going to get the trading signals with those entries, targets, and stop losses. You can see our entire trading track record for the month. We had 23 trades, only 2 losses, and you can find our entire trade track record since February 2022 by clicking 2021, by clicking the link. We do have a sale going at the moment between 10 to 40% of our memberships. If you want more information about that, click my name over here to contact me or find the details over here. Let's get into a video, guys. And we have a lot to talk about today. We'll go over market data, talk about DXY, talk about the broader markets, talk about the debt ceiling announcement. I want to bring something else up about the debt ceiling because a lot is going on there, and we'll get into Bitcoin finally after that. So 24-hour volume is up 64%. We're sitting at $66 billion, so a nice surge in volume as the price has moved upwards. Along with that, we have seen a 252% increase in liquidations. Absolutely insane stuff, guys. A massive surge in liquidations. Just gonna get that out the way. 252%. For the month, Bitcoin is currently down 3.09%. Again, we are coming very, very close to retest that key level, which is going to be 28,400 as per the monthly open of the prior candle. If we go over to our monthly chart, we can see over here, the last candle opened at around 28,444. This is going to be a very key level for us to break above and close a monthly candle above, or it's going to be a very key level if we do break below it, as it represents the open price of the prior candle. And if we do close below that level in the monthly in 3 days time, in fact, we are going to be printing a bearish engulfing candle, which could potentially signify high time frame weakness. However, if we do break above and close above, that is going to signify strength, as we actually had a long wick below, which represents a shift in momentum and strength within the 30-day period and a potential continuation in the trend. So Bitcoin really is like on the edge of a fence now. So really deciding which way it wants to fall, and we'll talk a little bit more about it when we get into a video. Moving on from there, guys, we can see the volatility index on both the 30 and the 60 has spiked up just a little bit again, which is expected as we do have these surges in price action. But again, we do have to remember the volatility index over a 30 and 60 day period takes the average volatility over that day range. So it will take some time to actually see how the volatility has adjusted based on the recent price movement. However, we can assume volatility has gone up because we have seen momentum rise, we have seen volume rise, we have seen liquidations rise. All of these do suggest our overall volatility in the market has increased. Moving on from there, guys, looking at liquidation, we can see the majority of liquidations have come from shorts. Nearly about 90% of these liquidations have been from shorts, 121 in total and 100 million from shorting positions. absolutely insane, guys. Let's go ahead and talk about the DXY. So we'll go down to the daily chart on the DXY, ignore all of this stuff over here. We'll go ahead and zoom in. And as we can see, the DXY really hasn't moved too much, right? We've seen a move upwards ever since we broke out of our double bottom and downward sloping resistance. The move upwards has continued now for about 2 or so weeks. And we have moved up to around 104. We do have a major liquidity zone such as resistance at 105 to 106. That is still going to be the next target for the DXY, provided we are able to stay above the uptrending support line represented by this black arrow. This is our current uptrending support. If we lose that level, we can expect a move such as that to occur, where we ladder down, retest our liquidity zone, and then drop to our next support. However, until this trend line is lost, we do expect a slow move upwards into this range, where we'll then test as resistance. Now, we have a lot of economic data coming out. We have NFP, and we have, is it PPI? I think it's NFP and PPI coming out very soon, which is going to be on the 2nd of June. And including that, we have our debt ceiling announcement on the 5th of June. So we have a lot of data coming out soon, and all these pieces of data can either push DXY up or, of course, drag it down. And I want to talk about that in 1 second, as we have a contradiction between those pieces of evidence, which we'll discuss. Looking at the Dow Jones and S&P 500, not too much going on over here, guys. We have once again broken above this resistance level. We are still looking for that weekly close above. So we do not have that weekly close above yet. We have the weekly candle currently above it, but we're looking for a weekly close in 2 days and 23 hours to confirm that this resistance is broken. If it does actually validate a breakout, we can expect a move up to our next resistance. Of course, if it doesn't, we can expect a move towards our lower support. Looking at the higher time frame structure here, we do have a rising channel formation, and therefore, if we do lose this uptrending support, that will result in a continuation even lower. Going on to the Dow Jones, we can see a very similar thing occurring. We have our upper resistance over here, which we need to break a weekly candle above to push higher. And of course, if we break a weekly candle below this trend line, we are going to push lower. Now, before we get into Bitcoin, guys, I want to talk about the debt ceiling a little bit more, because rumor has it that they are not going to be raising a debt ceiling until January 1st, 2025. Now, it is a rumor, it is speculation, it is not confirmed. I've actually tried to back check this. I've tried to fact check it for a few hours. I can't find anything about it, but this guy's got a pretty good track record, talking about these things and actually coming true. I want to know, you guys go ahead, try fact check it. Let me know if it is true. Let me know if it's false, but we'll talk about it anyway, just in case it is true. So the debt ceiling announcement is coming out on the 5th of June. And essentially what debt ceiling is the max limit of borrowing power the US government has. They can't spend more, they can't borrow more. Think of it as a credit card. You can get a credit card with $2,000 limit, $10,000 limit, $100,000 limit. When you reach that limit, you either pay it back or you can't take out more money. You can't use more money. So essentially that is what the US government is doing, right? They currently operate at a $1.7 trillion deficit per year, and they have around $31 trillion in debt. They want to push it higher. They want to push it up to 34 trillion. They want to push it up to 36 trillion. But this post here states they're going to basically have an unlimited debt ceiling until January 2025. Now, this is not obviously confirmed. This is possible. This is definitely on the cards. It's not confirmed, but this guy says it is, so we'll see what he says. But I want to talk about it, because if that actually occurs, guys, if they actually have an unlimited debt ceiling, it means they can essentially spend, print, and borrow unlimited money until January 2025. What is that going to happen to the economy? The US dollar is going to nuke. Asset prices are going to absolutely fly up. Interest rates are going to absolutely, well, they're going to have to fly up, but they won't, right? Because there's a contradiction. Here's a contradiction. Interest rates will have to move up, because if they allow a debt ceiling limit of unlimited funds, that will push inflation up. So for them to say and sit here and say, we're going to take a raise in a debt limit, we're going to actually increase the debt limit ceiling, and we're going to take an unlimited cap, they're essentially pushing the significance of interest rates and inflation off to the side. They're saying, we don't care about rising inflation. We're going to take all this extra money. We're going to spend all this extra money, which is going to result in inflation rising. So how can they sit there and say, we care about fighting inflation, and then they're doing something that's completely contradictory to that matter? Because if they do this, it's going to allow more spending, and more spending results in higher inflation. And if high inflation continues upwards, we're going to have to see interest rates come up as well. But why would they rise interest rates if they're taking in more debt? Wouldn't that just put them in more debt? There's a massive contradiction going on here. It's very, very confusing stuff, and it's going to be very interesting to see what they do. But either way it goes, they are between a rock and a hard place. In my opinion, they can cut off the leg to save the body, or they can kick the can down the road. But I do not think they're going to cut the leg off. I think they're going to kick the can down the road. I think they're going to extend the debt limit. They're going to raise the debt ceiling. They're going to result in higher inflation. They're going to pretend like inflation isn't rising when it absolutely is currently rising. We have data suggesting it is. Inflation month on month is up 0.4%. PPE is up PPI is up 0.2%. NFP is up 183,000. We have more leading evidence on employment rate, income, and spending suggesting inflation is rising. Yet they're going to go ahead and raise the debt ceiling limit. They're not going to adjust interest rates, and they're going to allow inflation to chew everyone up for the next few years. So if that is true, if this is true, guys, this is very, very bad for the middle class, incredibly bad for poor. We're going to see assets start to rise again, which is very bullish for the cryptocurrency market, very bullish for the stock market, and we're going to see the inflation destroy your buying power. It can happen. It will happen if they allow it. Do not listen to them. Do not trust them. Watch what they do, not what they say, guys. Very interesting stuff. Let's go ahead and jump into Bitcoin, because this actually has relevance to Bitcoin, because if this passes, the debt ceiling limit rises, we're going to see a positive reaction in the markets, so the markets are going to rally. And that is half the reason why Bitcoin has gone up so aggressively in the last few days, because we've had announcements that the debt ceiling limit has been pushed back to a 5th of June decision and is more likely to pass through. They're more likely to come to an agreement which allows them to actually extend that limit. And if it does extend the limit, it means more printing, it means more money, which means, asset prices are going to rise. So definitely keep an eye on that, guys. But it is a massive contradiction, and it's a contradiction that you have to be aware of, because again, there's a lot of uncertainty surrounding what is going to happen in the future in terms of how they're going to allow the ceiling to rise while keeping inflation under control and adjusting interest rates accordingly. Very, very interesting. Let's get into Bitcoin. So I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. Currently on Bitcoin, guys, on the smaller time frame, what we saw was a breakout of this horizontal consolidation. This is a horizontal consolidation over here. When we broke above 27,450, we saw a strong move upwards. In fact, we talked about this on the Telegram channel right over here, way back in 19th of May. We said if we break above 27,450, that will constitute a bullish trigger and likely send the price upwards out of the chop zone towards 28.4K as a high target. In fact, we saw that exactly, right? We broke that trigger point, we saw a bullish compression, and we saw the price move upwards to 28.4 on the dot, hitting that target. A strong move. But we do need to zoom out and assess what is going on. If we zoom out, what can we see? Well, we can see the price is now out of the short-term bearish territory. We were in a short-term bearish territory underneath the 28K level and the uptrending horizontal diagonal resistance line over here. So technically, the price is now in a neutral territory. When does the price become technically bullish on the small time frame? We need to break above the 29.8K level. If the price breaks above 29.8K level on the short-term time frame, we're going to see a high time frame bullishness as a result, right? If that makes sense. If it doesn't, I'll say it again. On the small time frame, we have bullish momentum right now. The price is technically bullish. It has to have been bullish because we've gone from a bearish trend into a neutral trend. That represents a shift in strength. It represents a shift from bearish momentum to positive momentum, and thus positive price action, and thus an uptrend. However, for the short term to translate to overall bullishness on the higher time frame, we need to break above 29.8K. That is when we have the bullish trigger on the higher time frame. So let's go ahead and review that. For the bulls to take control on the higher time frame, we need to see 29.8K broken. If we go to the daily chart, what we can see currently is the price has pushed upwards from our 26K support level to the midline of the Gaussian channel. We are currently still in a downtrend, and that is why on the smaller time frame we are in neutral. That is why on the daily chart we are still in a weak bearish trend, okay? Because we are underneath, or we are on the 28k resistance at the Gaussian channel midline, and more importantly, underneath our downtrending resistance. So when does a chart flip bullish on the daily chart? Well, we need to see two things. We need to see, number one, a break above this downtrending resistance, and number two, a momentum shift of this trend line, meaning the RSI has to break above this trend line. If we see those two things occur, that will then put the price action back into a bullish weekly trend. And if we have a bullish weekly trend, we facilitate a move to retest and potentially break above 30,000. Why is that significant? Because as we said at the start of the video, guys, 30,000 is going to be a major yearly trigger point. We can see every single time we retest that $30,000 level here, we have resistance. And according to prior cycles, the $30,000 level in this cycle is represented by the horizontal resistance line representing a yearly bull run low, as we saw in this cycle, as we saw in this cycle. Every single time we close a monthly candle above, we see a strong move upwards, monthly candle above, strong move upwards, monthly candle above, strong move upwards. What does that mean? Well, it means if we break above 30,000, we go from this bullish weekly uptrend into a macro bullish uptrend. Okay, so what happens next? If we break above 30,000, what can we explicitly expect? So let's take a look at prior cycles. Every time we close a monthly candle above 30,000, we end up going to retest the high of the first dead cat bounce of the prior bear run cycle. Since that point, we then reject. Okay, let's go to a prior cycle. We come up, we close a monthly candle, we go up to retest the high, okay, the open price of that dead cat bounce, then we reject. So in this instance, if we do close a monthly candle above 30,000, we can expect a move towards $48,000 over the coming months, where we will most likely reject again before continuing up into a bull run. So right now, guys, on the charts, we are looking good. We are not looking bullish on the daily. We are not looking bullish on the weekly. However, the smaller time frame price action is looking better. We have gained bullish strength. We've given us a potential to start flipping this high time frame trend, but it looks like the bulls are starting to get slightly ahead of themselves, because overall the structural and volume range levels which define the current biases of trends have not yet changed. We are still in a daily downtrend. We are still in a weekly uptrend, okay? And we are, sorry, my bad, flipped it around. We are currently in a daily downtrend, yes, okay? The weekly uptrend is technically still bullish, okay, until 25.2k is lost, but we are currently still in a weak daily downtrend. Unless that daily downtrend flips, we are not going to see a continuation upwards. For that weak bearish downtrend to flip, we need to see a break above that diagonal trend line here, as well as this level here. And again, for that to occur, we're going to have to see that break over 29.8 thousand to validate those 2 points. So I don't expect too much to happen, guys, over the next few days. I really don't think this move is anything of significance. I think it's an important move because it gives the bulls hope. It gives the bulls potential to push the prices higher. But overall, if we actually look at what's happened, we can see the bulls have reclaimed some significant levels on a smaller time frame, but the move hasn't quite been strong enough yet to really start to flip the trend upwards. But that doesn't mean it won't, because we are starting to see bullish momentum build. We are starting to see bulls take control again. They haven't quite yet got control. Now, I don't expect a definitive move until the news data on the 2nd of June, which is going to be employment data, I think, and NFP data is surpassed. I think that's going to bring a lot of volatility. And then I definitely think the debt ceiling announcement is going to shift the markets significantly. Now, that does definitely have the possibility to push Bitcoin over 30,000. I think between now and then, be a little more cautious in your trading. Be a little bit more cautious in what you expect, and I definitely think the price action is going to be more volatile, more sporadic, and definitely harder to predict, as news events can shift price action massively. Remember, technical indicators and structural analysis is they're descriptive. It's a descriptive and predictive method of price action. But what actually drives price action is news events. So you can have a news event that drives price action, pushes and pulls price action in certain ways. TA can help you understand where it's going to go when that news event occurs, but TA can never predict what the news event is going to be. So let's go ahead, guys, and jump back to the daily chart and really finish up and discussing one more thing, which is, could the bears still push the price down? Because we talked a lot about now how the bulls are kind of reclaiming strength, which they are. As we said already, guys, we took shorts at $30,000. We sold all our shorts. We had a few shorts. We actually got a few shorts left, but we sold like 80% of our shorts and massive profit under 26K. We said under 26K, we're going to be looking for reversals. We're going to be looking for bounces while the majority of people flip bearish. We saw that. We saw the majority of people start to flip bearish. Look at this chart over here. We flipped bearish at 30,000, now cashing in sub 28K. Majority flipping bearish at sub 26.8K, are exposing of the massive risk. So you can go back and look at this chart over here. Our post, we talked all about it. We told you guys we flipped bearish at 30, we sold at 26.8, and we were looking at the majority again getting wrecked if they were taking late shorts under 26.8, which is exactly what happened. So now, what is the potential for the bears to push the price back down? So while we remain underneath this trend line, it is still possible. Do not sit here and trick yourself into believing the bulls have absolute control over the price action right now, because they definitely do not. Remember, for the price to continue up on the higher time frame, a monthly candle closing still over 30. We still need to see that happen. It doesn't matter what happens between now and 30, we still need to see that happen. So the best possible risk upside scenario you have right now is a $2,000 move up in comparison to a $3,000 move down. The risk return is still in favor if we're talking about risk return of shorts. It doesn't mean the probabilities are in favor of shorts, but it means the risk return is in favor of shorts. So if you're jumping into late longs, aping in right now, you are taking excessive risk. You should have done so below when we broke out of this level to take short scalps, and you should do so when we close a monthly candle above 30,000. But there is absolutely no harm in waiting for that macro validation to come through to actually confirm that we are in a macro uptrend and this wasn't just a bull trap. Anyway, guys, I'm going to leave it there. I'll get into it a lot more tomorrow. I wanted to give you a brief overview of everything today. I hope you enjoyed today's video. Tomorrow we'll get into the real depths of the TA, talk about the technical data, and go over a little bit more about the price predictions. But I hope today's video gave you a little overview and kind of calmed your nerves. If you're a bear and you missed this move, hopefully it calmed your nerves. If you're a bull and you're getting overly euphoric, hopefully it brought you down a little bit more to reality and educated you guys on the key levels we need to look for. So just to reiterate one more thing, everything one more time. Macro bullish above 30,000. Monthly close above 30,000, macro bullish. Momentum flips on the monthly chart from bearish to bullish if the monthly candle can close above 28,444. Okay, daily chart becomes weekly bullish if we get the break over the downtrending resistance as well as the downtrending RSI. That is when we become weekly bullish. That is when the price pushes back upwards. That is when we get weekly bullish momentum, okay? And for the smaller time frame, right now we are in a neutral territory, meaning we do not expect too much to happen, and we have a downtrending resistance here. If we break the downtrending resistance here, expect a move upwards to our next trigger, which is 29.8. Okay, if that doesn't happen, expect the downtrend to remain downtrend, and rejections towards these levels are possible. Do not anticipate a move towards 25.2 or 24.4 until 26K is lost. If 26K is lost, we enter the strong bearish short-term move and it takes us down to 25.2. Thanks for watching, guys. Check out the VIP sale, join up the channel. You'll get access to obviously all my trading signals and of course our group chat with all our VIP members. Thanks for watching, and I'll catch you guys tomorrow.